Hello everyone. This year for the Student Managed Investment Fund, we decided to do a presentation to present to you all what we have been doing over the year. So one of our fund managers will start us off and you'll get to meet us soon thereafter.
For our agenda, we are going to start with an introduction about the Meredith Student Investment Fund and then go into the policy statement and theories. Then we're going to have an overview of our portfolio and go into an investment analysis and performance and into investment decisions. And then we will talk about risk management and how COVID-19 has affected the stock market, and then we will have our conclusion. The Meredith Student Management Investment Fund started from an endowment to the Meredith College School of Business. Students have managed, tracked, and made decisions for the fund since its inception. The SMIF is overseen by an advisory board with a faculty advisor and a member of the Meredith College Foundation Investment Committee.
I am Marie, and I have been a part of the Student Managed Investment Fund for the past 4 semesters.
And I'm Hope, and this has been my first semester working with the investment fund.
I'm Valerie, and this has also been my first semester working with the investment fund.
I'm Callie, and this is my second semester working with the Student Investment Fund. So, our investment policy statement was drafted and approved and put into action in the spring semester of 2018. We are very liquid as all income and gains earned throughout the year are reinvested into the same stocks or other stocks that we see fit. We are exempt from taxation and we operate with a perpetual time horizon. 2 common investment theories are top-down and bottom-up. With top-down, you analyze the economy as a whole, and then you research more recent results to figure out what's the best spot to put your money in. With bottom-up, you focus on singular stocks, and then you make decisions from there based on how they're performing as an individual. We operate with more of a financial prospect theory as we value the gains over the losses and look for where we can earn steady income without taking bigger risk.
So here we have our portfolio overview. We have 12 stocks that make it up. We have Coach, Exxon, Johnson & Johnson, Juniper, Kohl's, Lowe's, Microsoft, PG&E, Qualcomm, Southwest, United Health, and Zimmer. So here you can see our equity breakdown of our different stocks, our smallest being Zimmer and our largest being Microsoft. And this is kind of to show you the diversity of our portfolio. You can see most of our stocks are within healthcare and technology. Followed shortly behind was the consumer and industrials, with a slight portion within the utilities and energy industries.
For investment analyses, we looked at each stock that we held in our portfolio. However, we had to exclude Coach as information for Coach was not readily available on some finance platforms or the data provided was not accurate. So all of our information regarding the analysis of our portfolio has excluded Coach. In the portfolio analysis, we looked at each stock that was in our portfolio, and we were able to look at data, 10-year data from 2006 to October of last year. And as we looked at the stocks, we looked at the mean, which basically shows the average return of the stocks, as well as the standard deviation, which shows the level of risk associated with that stock. For each of our stocks, we found that we were gaining and operating at a higher mean than the S&P 500 index, which is the benchmark that we have been using for our as a benchmark for our portfolio. As part of the analysis, we went ahead and developed 3 different portfolios, one for a risk-averse investor, one for a risk taker, and then one based on the Sharpe ratio. And given that we are concerned about risk for our investment fund, we were more focused on the risk-averse portfolio. And with all the stocks held in our portfolio, we found that Johnson & Johnson and Microsoft had a higher Sharpe ratio, and this meant that these stocks were more risky. However, these stocks also yielded a higher return, which is sort of a justification for the higher risk. From our annual return, we found that all of our stocks had a return of at least 5% or more, with the exception of PCG, which is PG&E Corporation, and we will go into this further in our presentation.
The Meredith College investment portfolio has performed a positive return overall after our analysis we found. We also found that we outperformed the S&P, which had an average return of 0.61%, while we had an average return of 0.81%, only including 11 out of 12 of the stocks in our portfolio. All of the equities in our portfolio outperformed them with the exception of PCG, otherwise known as PG&E Corporation. They have had a historical negative return, and they recently filed for bankruptcy.
This graph shows the 5-year performance, and you can see towards the end of the beginning of 2020 how the COVID-19 pandemic has affected our fund a lot in comparison to the S&P 500.
So this is a bit of a shorter analysis for the past year. So as you can see in the beginning of this past year, there was a point where our investment fund was actually beating the S&P 500, but since then we have trailed slowly behind them. And as Valerie mentioned, you can tell within the past month or two that COVID-19 has very much so affected our stock's valuation.
This graph shows the 6-month performance of the investment fund and the S&P. As you can see, similar to the previous 2 graphs, that we have stayed very close in our performance, but due to the pandemic of the coronavirus, we have underperformed, as has the majority of all stocks out there, but we are making a comeback.
This final performance graph shows the student investment fund portfolio's performance and the S&P 500 performance over the past month. And here you can see that recently there's been some talks of market recovery, mainly in the pharma sector, which we will go into later. And you can see that reflected here in our portfolio returns over the past month. Next, we will go over investment decisions that we have made over the years.
Our first investment decision is to maintain a high dividend yield stocks in our portfolio. The second is to sell our holdings in PG&E Corporation and use proceeds to purchase fixed income securities. And then our last is to amend the SMIF investment policy statement to include risk management strategies.
During our analysis, we found that all of our stocks outperformed the S&P except for PCG, which, as previously stated, filed for bankruptcy. They were linked to the California wildfires, and they have had to pay millions to victims affected by wildfires. They've had a steady decline, as shown in the graph below.
So for this section, we are going to talk about risk management and why we're considering it. And based on those considerations, what we will do as a class together. So we're considering risk management because we really don't have the specified risk management strategy in our student investment policy statement. And part of that would have included strategies that we would use to hedge against major market events like the current pandemic, which we do not have in our investment statement as well. Another thing we do not have in our investment statement is that we don't have a way to measure or have a criteria set up that we can use to evaluate what we should do to put in stop loss decisions for equities that are losing significant value in our portfolio. Based on these considerations, one of the first things that we plan to do as a fund together is to amend our investment statement to include a risk management section. Part of this risk management section would have ways and methods would evaluate the different equities in our portfolio to implement a stop loss strategy. This is so we know when is a stop too low to sell it and to sell it out of our portfolio. We will also try to develop a hedging strategy, which will help us make decisions when major market movements happen. And the equities that we would sell to get those proceeds, we'd sell some equities, and proceeds from that we'd hope to invest in fixed income securities. That is because our portfolio has moderate risk and it's only made of equities right now, meaning we have no bonds or mutual funds in our portfolio, and that is something we plan to do to minimize the risk our portfolio is exposed to. The securities we'll buy, they will have to meet our ESG requirements, which is basically environment, social, and governance requirements that we have in our portfolio, because part of our investment policy statement states that corporations that we invest in must have a good standing under this criteria. Next, we will talk about how COVID-19 has affected the market as a whole and our portfolio.
So as Marie just mentioned, COVID-19 has affected the health of individuals across the globe, which has in turn affected many economies, which means that the stock market has been affected, especially here within the United States. In late March, the stock market saw the greatest decline it had in years in a single day, which also affected our stocks valuations. Effects of COVID-19 have trickled down into many industries, causing extreme fluctuations in the securities. SEC introduced trading halts earlier this year to try and help stabilize the market. And recently, markets have been rising with bullishness to pharma companies. The student investment portfolio has been impacted by the market movements during the COVID-19 pandemic. The return from our portfolio has been set back. However, we do still have a positive return of about 3.3%, which has been between October of 2019 and April of this year.
Thanks, Hope. And to further explain on that, our portfolio, the first graph here shows our portfolio's movement over the past 6 months and how the COVID-19 crisis has affected it. You can see that our portfolio has been at a steady decline following the trends of the S&P 500. In the second graph, we're able to see how our portfolio is performing in the last month. There's been major news outlets like Barron's and Wall Street Journal and CNBC that have said pharma companies have a bullish outlook on the market as they're working to develop a vaccination for the COVID-19 crisis, and that has caused some market upticks. And given that our portfolio has a big percentage in the healthcare industry, that has been favorable to our portfolio. And we can see that our portfolio is still performing a little bit over the S&P 500 index. And to conclude our presentation today, we want to go ahead and thank you all for listening to our presentation and share that the Student Investment Fund will continue to monitor and manage our portfolio. Part of the decisions that we'll make will include the purchase and sale of securities in our portfolio. And we encourage new business school students to be a part of this great initiative and gain more knowledge by participating in this investment fund.